Everyone, welcome back to Investing Club. In this video, we're going to talk about some signs that the stock market is in a pretty big bubble right now. So now here's a pretty interesting article from Barron's. Kodak has some people talking again. So that's right, they're talking about Kodak, the company that made cameras that's now obsolete. So why is everyone talking about Kodak, a company that basically has no business model anymore? Well, it's because they were awarded a $765 million loan to make generic drugs. And this loan is from the government. And what happens with Kodak is Kodak jumped something like 30,000% last week. And it's not because the company is starting to make cameras again. It's not anything like that. It's because they got awarded a $765 million loan from the government. And what was this loan for? It was to make generic drug ingredients. So what essentially happened is the United States government gave Kodak a loan under something called the Defense Protection Act. And they said, Kodak, you're going to become a drug manufacturer now. Now you're going to make medicines for us. And we're going to give you this loan to help you do it. And I thought it was funny that it says this. A lot of analysts are confused why the government would issue a loan to Kodak to become a drug manufacturer when they could have just given the loan to a company that already makes drugs. Doesn't seem to make a lot of sense. Right now, Kodak is literally one of the worst companies in existence. Their management team is awful. They ran the company into the ground multiple times, and now they're given a loan to become a drug manufacturer. And so that makes me scratch my head a little bit because what does Kodak know about manufacturing drugs? Doesn't really make sense to me that a company that doesn't even do what it's made to do well, which is make cameras, this company hasn't been profitable in years, and all of a sudden the government just gives Kodak a loan, do something that they have no experience doing. Doesn't make a lot of sense to me. So when we take a look at Kodak, what happened? Kodak stock was at like $2, and this announcement came out that they got a loan from the government, and what happened to the shares? They went up all the way to just about $60. So something like 30,000% Kodak shares jumped on news that they were getting a loan from the government. So at that point, the market cap of this company was billions of dollars. Were they worth billions of dollars? No, it's pretty obvious that they weren't, but people kept buying Kodak stock anyway. And this article actually goes into that, talking about the possible valuation of Kodak now that they have a new business model. And they talk about a similar company that could be comparable to Kodak. Again, no one really knows, but if Kodak basically replicates this company's strategy, that $765 million loan could be expected to turn into $1 billion in sales, and that would turn into $120 million in EBITDA. And so based on the multiple that this other stock is trading at, that means Kodak would be worth around $1.2 billion. And again, that's a wild shot in the dark at valuing this company because no one really knows what they're going to do. I personally don't think they're going to do anything great. This company struggled for a long time, and they obviously don't have a very good management team. So I don't think they're going to use this to turn the company around. But at the peak, this company was valued at like $4 billion. And it's a story of no one cares about valuation anymore. People are just buying because they see the stock price going up. There's some sort of news catalyst, and they're just going to buy the stock because all they do is go up. And that's a pretty clear sign that we are in a stock market bubble right now, and there's a bunch of excess building up in the markets. Now, we don't even have to look at these small cap, no-name stocks that have some sort of news behind them. We can also look at well-known stocks. We can take a look at Apple. And Apple is trading at a 34 times earnings multiple right now. I personally would not buy Apple at anywhere near these prices. And the stock price has been going up over the past week on news that they were having a stock split. And going up on news of a stock split doesn't really make much sense since it doesn't really do anything. A stock split really has no effect for the company. Their market cap's still the same, their sales are still the same, their operations are still the same. The only thing that's different is that now there's more shares. So whenever a company announces that they're splitting shares, or that they are doing a reverse split, I don't really care because it doesn't make a difference at all. To me, someone that actually looks at a business when investing in stocks, not just a line on a graph, the thought that a lot of these people probably have are, well, if Apple's only going to be $100 now instead of $400, there'll be a lot more people willing to buy Apple if it's more cheaply priced. I think that may have been true in the past, but now with brokerages, you can buy $5 worth of Apple stock. I don't think it really matters what price stocks are trading at anymore when you're able to buy fractional shares. So again, I don't think that's going to have a big effect for Apple, and there's no reason that I would pay a 34 times earnings multiple. The most I would pay for Apple is probably around a 20 times multiple. That's the absolute highest I would feel comfortable paying for Apple because they're a company they're projected to grow at 12% a year. So they are still growing at a pretty good rate, but nothing extreme. Everyone knows what Apple is now. Apple's a mature company, and they're growing at 12%. And that growth is probably going to continue to slow. They're already at almost a $2 trillion market cap. So companies that big won't just keep growing as fast as they did in the past. Another stock we can take a look at is Shopify. And this is a pretty popular name that everyone's been piling into. I don't even know why, just because it has to do with e-commerce, and e-commerce is doing well while everyone's staying home. Well, what's the valuation of Shopify right now? It's at a forward PE of 560. They don't even have a normal PE ratio because they didn't make money last year, but they're trading at 560 times next year's earnings. So basically what that means for anyone buying Shopify at this price is that they're buying Shopify's earnings 560 years in advance. They're buying at the price of Shopify's earnings in 560 years. Doesn't seem like a very good investment to me. And I'm not arguing that Shopify is not a good company and that they're going to crash and burn. Obviously they're a good company. They have something going for them. They're growing very fast. But that doesn't mean you can just slap on a multiple like a 560 earnings multiple. It just makes no sense. And it's clearly signs that we're in an inflated stock market, a stock market bubble. Now, I'm not going to come on here and tell you that a crash is about to happen next week because I have no clue what the stock market's going to do next week or next month. But the only thing I do is when I see valuations this high, I think the most logical thing to do is just to wait until they come back down. Every time through history when valuations get high like this, they always come back down. So that's exactly what I'm doing. I have a lot of cash and I'm waiting. And like I said, that might not happen next week, next month, or even next year. The thing about stock market bubbles is they always go on longer than you would expect. So I'm not really expecting anything right now. Valuations are high, and I'm just going to wait until they're not as high before I start investing, whether that's in a few months or whether that's in a few years. So that's it for this video. Just wanted to point out some signs that the stock market is in a bubble and that we have all of these stocks just exploding higher based on some trivial news that doesn't really matter in the long run of the company. So if you learned something from this video, hit the like button. It helps push out my video to more people on YouTube. And if you want to see more videos just like this one, subscribe to the channel and hit the bell icon so you get notified whenever I upload a new video. Thanks for watching, and I hope to see you on the next video.